Hi friends, Simit here from InformedTrades.com. Today is Tuesday, September 9th, 2014. Time for our daily Forex chart review. In these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as part of helping traders learn. You can learn from my successes, learn from my mistakes. We can all learn together. Any questions you have, anything you want to add, join us at InformedTrades.com. We also have a huge archive of learning material there, so if any information I'm presenting is unfamiliar to you, check out that part of Informed Trades, and we can all learn. Okay, let's take a look at the charts. First up is a chart of gold. Gold is now at 1253, is broken below support at 1260. Next target or next support level would be 1241.50. You can see that on the black line on the chart right here. Or excuse me, right here. Going back to early June, that would be the next target. We are below the 50 simple and 200 exponential moving average. So, and we also have a pattern of lower highs. So you clearly have a downward trend. Next target is 1240. Let's see what happens at that level. Okay. Now on to some of the Forex trades that I have on at the moment. Euro Kiwi. Well, this trade I actually got stopped out of, and it was a bit. I've had a couple of trades recently where I got stopped out too early, or basically the reason I got stopped out is I moved my stop to break even too early. So I think the lines here are no longer visible, but I moved my stop to break even, right around this candle, somewhere around here. Or no, I did it right here after this downward move. So when the market was right here, I moved my stop to 58.20, somewhere right around here. Actually, let's add that line. So I entered the trade at 58.21, right around there or so. So let's fix that. 58.21. These charts from TradingView.com, really think they're the best charts I've had. And I entered on this candle here. Then the market fell. I moved my stop to break even, so I moved my stop here. Then we rallied a bit, and then we rallied just to where it hit my entry point. But that took me out of the trade. So I didn't lose any money, but because I moved my stop to break even too early, it took me out of the trade. And then the market really went down. That would have been a much nicer profit opportunity for me had I not moved my stop to break even. So now, of course, the reason to move your stop to break even is to de-risk the trade, to eliminate the potential for losing money, which I did successfully do, although I also, in the process, because I moved it too early, I eliminated the profit opportunity as well that eventually came. So that's something to think about with Euro Kiwi. The same thing happened, and actually in a more brutal way, because the ensuing move was much better, on Dollar Canada. So on Dollar Canada here, I had entered right here. I saw on this candle. Then the market came back down. I entered here. Oh, excuse me. I think I got filled on this candle here. Then the market rallied. I moved my stop to break even, and then it came back down and tested it. So I just moved it too early. My original stop was right around here, but you can see we've had a couple nice days. So I logged into my trading account this morning, and I expected to see some nice floating profits, but unfortunately, because I moved my stop to break even too aggressively, I did not have those operating for me. Now, is it really too aggressive? Did I make a mistake there, or is this just a trade that didn't go my way? Usually, I like to see the market clear a resistance level. That rule, I think, is still valid. So maybe I need to tweak it. Maybe I need to redefine what constitutes a legitimate resistance level. So for instance, in the case of Dollar Canada, once the market cleared this resistance level right here, which it did right here, or it touched that resistance level, and then it came back down. So I moved my stop to break even. When the price reached this level, I moved my stop from down here up to break even, and then of course the price came back down. So if I had to do it over again, I probably would still do the same thing, but that's definitely something to consider. So we'll see. Something I still need to work out, and perhaps there's room to refine it. Now, Kiwi Yen is a trade that I'm still in at the moment. I see what the problem is. Let's go to and load the saved charts. That's why these lines were appearing. But Kiwi Yen. Okay, so this trade already has been de-risked. My stop is at break even. So far, so good on this. It's pretty, not much to do here. I'm just going to wait really to see if the market reaches 89.65. I may be in this for a while, and if it gets to 89.65, it's probably going to take a fair amount of time. Now, normally in this type of a trade, if there is an opportunity for pullbacks to add to the position, when you really have a further out price target, the goal is to have as large of a position that you can safely build going into that profit target. So if price comes back down, maybe to 86.70, that'd probably be the first level I look at right here, 86.80, somewhere around 86.80, 86.75 maybe. Back down around there, and depending on the candlesticks, that could be an interesting level to add to. We'll see though. That's a little premature. But that's about it for my trades today. Nothing really new at this